It's about how to compare refinance rate in 2022. What is a mortgage refinance? A mortgage refinance is the process of getting a new home loan to replace an existing one. You typically follow the same steps you did for your purchase mortgage, except your new loan pays off your old one. A mortgage refinance typically leads to lower rate, a shorter term, or some extra in cash in your pocket. Mortgage refinance rate in there are shown mortgage refinance rates. The rates, APRs, fees, and monthly amounts are estimates only and are not guaranteed. The information provided is for illustrative purpose only and is merely conditional, quite subject to change, may not be able in all states, and are based on loan amount requested and credit worthiness as determined by the lender selected. Your financial information will be required to be verified. Compensation. The compensation may impact how and where products appear on this site, including, for example, the order in which they appear or whether lenders feature on the site. Mortgage lender determine the underwriting criteria necessary for approval. You should review each lender's terms and conditions to determine which loans work for you and your personal financial. Mortgage lenders situation are reasonable. Efforts are made to provide and maintain accurate information. Our rates will terms are represented without guarantee and are subject to change percentage to each lender's discretion. There is no guarantee you will be approved to credit or that approval you will qualify for the advertised rate. Fees or terms shown. Is now a good time to refinance? With rates expected to rise throughout 2022, it may not be the best time if you are looking to lower your current rate. However, there are other financial reasons for refinance, including getting rid of mortgage insurance because your home's value has increased. You may be able to reduce the cost of private mortgage insurance (PMI) on a conventional loan if you don't have the 20% equity required to avoid it. Lowering your monthly payment by replacing 15-year mortgage with a longer term 30-year fixed rate loan. Paying your loan off faster by refinancing a 30-year term to 10 to 15 or 20-year term. Paying off an adjustable rate mortgage before the ARM rate and payment adjust higher than current 30-year rate. Tapping your home equity to make home improvements, consolidate debt, or buy a vacation home. Replacing a government loan with a conventional loan to get rid of lifetime FHA mortgage insurance required on loans backed by the Federal Housing Administration. Refinance rate trend. How to refinance a home loan? Follow the 6 steps to navigate the mortgage refinancing process. Figure out your financing. Why do you want to a lower mortgage rate? Can you afford a higher monthly payment and shorter long term? Are you ready to borrow from your home equity? Get your financial health. Pull your credit reports and score. The credit score of at least 740 will typically get you the best rate offer. Budget enough cash reserves to cover your finance closing costs, which can range from 2% to 6% of your loan amount. Gather information about your home's value. Try home value estimate estimator or contact your real estate agent to help pinpoint your home's values. The more equity you have, typically the lower your rate will be. Shop around and apply. Pick 3 to 5 refinance lender and fill out application with it. Complete those apps within a 40-day time frame to minimize the temporary hit to your credit score from multiple hard inquiries. Lock in your mortgage rate. Once you have committed to a lender, get a mortgage rate like to secure the interest rate you were close on your refinance. Work with your lender to finalize your refinance. Submit any outstanding paperwork and schedule your closing day. Types of refinance loans. The most types of mortgage refinance options are offered by conventional lenders as well as lenders approved by the Federal Housing Administration, U.S. Department of Veterans Affairs, and U.S. Department of Agriculture. Rate and term refinance loans are considered traditional refinance and often serves the purpose of changing your mortgage rate or repayment term. Cash out refinance loans. With a cash out refinance, you get a new mortgage that has a higher balance that but you currently on one your existing loan. You pocket the difference between the two loans in cash. Streamlined refinance loan. The streamlined refinance option is exclusive owner will government backed loans from the FHA, VA or USDA. In most cases, no home appraisals in income documentation is required. High loan to value (LTV). LTV refinance loans. Homeowners with conventional loans who have little to no equity may qualify for a high LTV refinance. The minimum required LTV is 97.01%. Common minimum refinance requirements. The table below gives you a quick glance at the credit score, debt to income, DTI ratio, and loan to value (LTV) data ratio requirement for the types of refinance loans above. How to find the best mortgage final rate? Certified way to find your best mortgage refinance rates is to shop around, choose 3 to 5 mortgage lenders, and gather quotes to compare refinance rates. Comparison shopping with multiple lenders may save you thousand interest cost over your payment term. Make sure you also compare the estimated cost and fees with each lenders can be found on the loan estimate you receive after applying for a refinance. A super low rate with a super high fee may not be best fit for your financial plans. How to calculate your break-even point? The best way to determine whether a refinance makes sense is to calculate your break-even point. Just divide your total closing cost by your monthly savings. For example, if a refinance saves you 150 per month on your payment but costs you 5,000 in fees, the break-even would be just over 33 months. As long as you have a plan to stay in your home at least 33 months, the refinance saves you money. The Try Mortgage Refinance Calculator to help you crunch the numbers on different refinance scenarios.